Hello, chart watchers, and welcome to this Tuesday, April 17th Market Watchers Live Show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we're having a great day in the market today. As you can see, the Dow Jones Industrial Average up 254 points, the S&P up 27, the Nasdaq up over 100, now up 113 points, and the Russell 2000 joining the party up 16. 10-year Treasury yield, surprisingly, and I'll talk about why it's surprising, but surprisingly, it is down today at 2.83%. The Volatility Index continues to be pressured to the downside. This is very bullish for equities. We now have the VIX down at 1529, down almost 8% today. Technology leading the rally to the upside, right behind it on its heels. Consumer discretionary moving to the upside as well. Both now breaking above key moving averages, as you can see. We do have specialty retailers having a very strong day today, back up to challenge the early March highs. And the reason is Netflix. We'll get into their earnings report, but they had a very strong report and making a breakout to all-time highs. The internet stocks also very strong today after languishing for really on a relative basis the past month or so. Big breakout, though, today, and one of the reasons, Twitter. Twitter having a huge move to the upside, up more than 10% today. And after coming back down, testing that gap support level that was left from its prior earnings, Twitter now starting to resume its move to the upside, perhaps in anticipation of its next earnings report. And with that, let me bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing all right.
Doing okay?
Yeah, it was kind of a bad hockey game last night.
We're not talking hockey anymore.
Yeah, I know. I have one more game left to talk about. Hopefully it'll be a win. But after last night, man, we are just in trouble. We got spanked, if anybody doesn't know. I don't even know what the end score was. The last time I left, it was 7-1, but I think they got another goal.
They did.
Yeah. So, yeah, not great, but I guess everybody out there who doesn't like hockey is going to be thrilled that our seasons are ending early.
Yeah, they're probably begging for the Caps and the Ducks to be out of the playoffs because then they're done talking about it. But
although I do think I'm going to root for the Vegas Knights, being a brand new franchise and being in the Pacific Division. I'll probably root on them for the rest of the series. I think they have a really good shot.
Yep, and it is a historic season for them, no doubt. But I do want to bring in Bill Shelby. He is going to be with us today for Everything Stock Charts. Bill, how did we get you for a second straight week?
Everybody else was busy.
Oh, by default. It was by default.
By default, right, exactly.
What are you going to talk to us about today?
We're going to delve into a little bit more with industries. It's obviously a focus that the show talks a lot about industries, and they're a very useful thing to look at within the market to see how hot and cold areas. And we're going to come up with what I'm calling the Swiss Army knife for industry.
Okay, cool. Well, everybody's just going to want to stick around for that. And we're going to do that about 15 minutes past the hour. So hang in there just a little bit with us, Bill, if you can. And with that, I'm going to turn it back over to Aaron. Let's get through the announcements and the agenda, and let's get this thing rolling.
Yes, indeed. So this week, of course, we have Bill Shelby here right now with Everything Stock Charts. We are going to move on into the week with Zach. I don't see our slide yet, but I do happen to know what our schedule is. There we go. Wednesday, we have Tim Ord coming tomorrow from the Ord Oracle. You'll find him in Top Advisors Corner if you want to read some of his stuff before the show. Julius de Kempener, the creator of RRG, will be with us Thursday. And Tom is putting together a workshop for Friday, although you are still taking requests for subjects. So if you want to go and take the survey below the viewer there on the Stock Charts TV, please do, and suggest a few things for Tom to do on Friday. But for today, we will start off with Bill Shelby, Everything Stock Charts, after our technical headlines. We are then going to do a segment we haven't done in a while called Spotlight Stocks, and you'll see more about that when we get there. 10 and 10 to 1, our first symbol is going to be Planet Fitness, PLNT, and do like the symbol requests in the chat room because the most popular will make it to the 10 and 10. Agree or disagree will be our final segment, and you will find the poll in the polls section of the Slido app to the right of your viewer. Go ahead and take that, and we're going to talk a little bit more about that at the end of the show.
Sounds good. I tell you what, I've got like a huge amount of information. I always loved watching Chris Berman on ESPN do the fastest 3 minutes in sports. This could rival him, the fastest 10 minutes in stocks, because I got a lot of stuff to go over here. But here you can see the 10-year Treasury yield continues to consolidate. We are flat. And I mentioned earlier, I'm a little surprised it's flat because of the economic news that came out this morning. At 8:30 in the pre-market action, March housing starts came in at 1,319,000 units, well above the 1,264,000 units that was expected. And March building permits also rose much higher, much more than expected. We went to 1,354,000 units. The market was only looking for 1,315,000 units. At 9:15, about 15 minutes before the market opened, March industrial production came in stronger than expected. It rose 0.5%. The market expecting a rise of just 0.4%, and capacity utilization matched expectations at 78%. So with all of that, I expected we'd see a jump in the yield and maybe a flight away from the bond market into the equity market. We are seeing equities move higher, but I'm a little surprised that the bond market hasn't reacted. But again, I think it's still digesting the huge run up that we had in yields, and this sideways consolidation just moves on. I do still find this sideways consolidation to be bullish. I think the 10-year Treasury yield will go higher. The question is when, and for now, we just continue to consolidate. A couple of things on the major indices. First, the S&P 500. Posted this in my blog, but if you take and connect the two tops here, it comes down around 2730, and you can see that we've got gap resistance from, well, I can tell you, top of gap resistance is at 2712. The bottom of gap resistance right here is at 2691. So we've got that range, and we're in the middle of it right now. So we're right in the middle of this gap resistance range. We've got the 50-day, which we have jumped above, which is good. And then we've got that trend line resistance that comes in around 2730. So I was looking at the S&P this morning, figuring that this range may present some problems to try to get through. But if we can just move right through this, I think it won't be long before the S&P 500 could be seeing new all-time highs. But again, that's just my opinion. The Nasdaq, let's take a look here. We have a similar overhead gap resistance zone that we want to watch. We have cleared, I think that the number was 72.55 or thereabouts. So it may have been a 72.55 and maybe a 72.57 or 8. There's 72.57 and change, and there's 72.55. So that's a level that we want to clear on the close. Right now we're at 72.76, so we're well above it. But it would not be a good thing to leave a long tail up there and come back down and close near the low of the day. That would be much more of a bearish signal in the near term. But barring that reversal, I think this is really bullish action. I would expect that this gap is going to be filled back near the 73.50 area, which leaves us another 1% or so to the upside before we have to maybe run into some sellers there. The PPO here on the NASDAQ continues to strengthen, looks very strong to me. If you look at the sector leaderboard today, and you can do that from the member dashboard under the control center, and right here, I like to start with this each day, and it just tells me quickly, where's the money going? We know the stock market's going higher, but it does matter where it's going. And you can see technology, consumer discretionary, and industrials. 3 of the 4 aggressive areas are clearly outperforming, especially technology and consumer discretionary. The only group that's down right now, consumer staples. So that's telling us that XLY, XLP ratio is obviously moving much higher today. And I can pull it up if we want to just take a quick look. But there is the jump. We are back near, actually, we would close right now at about a 1-month high or maybe a 3.5-week high if we finish where we are today. And you can tell that by, instead of using a candlestick chart, if you use a line chart, it will connect only the closes. And you can see it is breaking back out above these recent highs. So I think that's bullish. As the market moves higher, you want to see money rotating back toward the aggressive discretionary part of consumer stocks, and that's exactly what we're seeing. Another bullish development has been the Volatility Index. The VIX has been declining now for 5 days in a row. If you've been part of the show for a while, you know I've talked about this in the past. The last two bear markets, the volatility index spikes when we have weakness, but when the market bounces, the VIX in the last two bear markets never went below 16. Here, back in early March, you can see we dipped briefly below 15, went back up, putting like a double top on the VIX, and now here we are back down at this 15 level. So this is the second time moving below that key support around 16 to 17. And as the volatility drops, that's telling us that the market is getting much more complacent, and that is fuel for a bull market. So we want to watch this very closely. Let's talk about, well, when we're talking about volatility, Goldman Sachs came out with a great report this morning. They did top estimates. Their revenues came in over 10 billion for the quarter. Market was only looking for 8.89 billion. Earnings $6.95. Market only looking for 567. So we look at the chart, we should expect this huge move up, and what happens? Big volume and a move to the downside. You might look at this and say, well, why? Why is Goldman Sachs acting like this? Well, I can tell you that based on the relative chart that I like to follow, Goldman Sachs has not been in favor. You can see the investment services group as a whole has been moving up. Goldman Sachs, relative to its peers, has been moving down. So you've got a great group, but you don't necessarily have a great performer within that group. I think that's part of the problem, and one of the reasons why I personally would be avoiding Goldman Sachs. I think if you wanted to take a look at, for instance, what is working in that space, since it's a strong group, you go back to the control center on the member dashboard. If you pull up the industry summary and scroll down to the financials, you will see investment services. If you pull this up and then click on the scooter, this will tell you the best stocks within the space. And if you keep scrolling down, you'll find Goldman Sachs with a scooter of 49 and change. Morgan Stanley 55. These are not the best stocks to be in this area. Instead, look at something like Interactive Brokers, which is trying to make a breakout right now. This stock, if we pull up the relative chart, you will see that, okay, here's the investment services moving higher. Clearly, Interactive Brokers has been doing extremely well. And this is the relative strength of IBKR versus its peers. So now, if you're in IBKR, you not only are in a good part of the market, but you have one of the better stocks within that space. I think that's really important when you want to try to beat the S&P 500. Do it with stocks that are outperforming. And again, you got a group that has been outperforming, even though it's pulled back in the last month or so. You do have a group that has been trending higher relative to the S&P, and clearly IBKR is one of the better stocks. So that's one way to take a look at it. A couple of areas of the market doing well today. The specialty retailers index, I see a bullish ascending triangle here. We have equal highs coming across. Yeah, I'm not going to annotate just to save some time, but this is an A, B, C, D. Breakout would be E pattern. This is a beautiful ascending triangle off of an uptrend. And the reason that we're seeing the strength here is no doubt Netflix. Netflix topped the revenue numbers, 3.70 billion versus 3.69 billion estimate. They topped bottom line, 64 versus 63 cents. And they also posted subscriber numbers well ahead of expectations, and in addition, raised guidance. And that is the superfecta in the stock market. And you can see Netflix breaking out here to the upside. And again, we go to the relative chart, and you will see move higher. You're the relative strength of, well, you're going to see absolute strength of specialty retailers. Netflix breaking out amongst its peers, and Netflix breaking out relative to the S&P. And again, this is a strong group relative to the S&P. These are the kinds of stocks that you want to be involved in. A couple of other stocks here. DJUSAV first. Let's look at this industry group. Media agencies had a great day yesterday, following it up with a good day, although it is leaving a long tail. This potentially could be a problem unless we see strength later in the day. But short term, this could be a problem. But I wanted to mention IPG because this is a company that's in this space. It's on my strong earnings chart list, and it is one of the stocks that are doing well, that's doing well here. And if we go to the relative chart, last one I want to show you here, you can see IPG has been doing extremely well. This was the earnings gap up. We went all the way back down. Look at this perfect fill to gap support, and now the move back up. This is why you look for key support levels to strengthen your reward to risk on your trades. Beautiful bounce off a gap support, making its way, almost got all the way back up to key resistance around 25 earlier today before pulling back. You look at the media agencies group, and it hasn't been doing that well, but IPG is one of the strongest areas. So when this group gets a pop, it's not unusual to see the stock jump back up into its leadership role, which is exactly what we've seen with IPG. Now, with that, I'm going to turn it over to Mr. Shelby. I know he's got some good stuff for us on the industry groups. I'm looking forward to it. Take it away, Bill.
Thanks very much. Let me get switched over to my screen here and get this shared out. So are you good there? Okay. Yes. So we're going to talk a little bit more about industries. I know industries obviously is a very popular subject on this show, and it's very useful from obviously investment standpoint to sort of be able to break the market into smaller pieces and be able to sort of analyze at a lower level what's going on. So we're going to talk about some tools and ways to sort of help that process. We've got some that exist already that we're familiar with, but there's one that I use that doesn't exist, and we'll go over how to create that. So we're going to see how to create that list and save the list, and then what we can do with the list, and then maybe some scans that'll help us help narrow things down. So the first thing we're going to do, as you're well familiar with, and Tom was just going over this, we can use our popular tools such as the sector summary. This breaks this whole market into sectors and industries in sort of a tree view or sort of a hierarchical view, so we can go in and see what industry groups are within the technology sector or the materials sector, healthcare, but we can't see all of them at the same time. So if we go into healthcare, we have no idea what's going on with home providers. So sometimes we want a more of a 30,000 foot level kind of view. And this is useful for being able to sort of dive down into the hot sector, the hot industry, the hot stocks. It's very useful for that. Not quite as useful for getting an overview of all of the industries. As Tom just mentioned again, we have our complete industry view, which does show all the industries, but we still have this overarching sector sort of influence within the view. So even here, we've got them all, but if we wanted to sort of stack rank everybody, this is closer, but still not quite what we need. So there's a way we can do this, and I'm a scan engine guy, so I'm sort of think scan centric. We can use the scan engine to create a group. And this is so easy that if you've got your laptop available and you want to do this, you can probably follow along. It's very simple. We're going to take this existing scan. We're going to get rid of it. We're going to start off and we're just going to say symbol starts with quote DJUS and then end bracket. We're going to check our syntax, make sure we got that all correct. Because we're very lucky in that all of our symbols for the industries are consistent and they start with DJUS. So it's very easy for us to sort of have the scan engine isolate them into a particular group. So I'll just kind of leave that there for a second if you want to follow along and type that in. I believe we may post that into the chat, or you can use the scrub tool to reverse in time during the show and go back and look at that.
Hey, Bill.
Yes?
I do want to just interrupt for a second and let you know that the renewable energy actually is DW Cree, but I think that might be the only
exception to the rule.
Yeah, that doesn't.
Okay, good to know there, because there's one other one that will show up that we may not want. So we may have to do a couple little edits, but thank you for that.
You're welcome.
We'll run our scan. And we can see this is pretty much what we'd expect to see. All of the stuff that Tom is always talking about. And he's probably the only one of the few who can recall all these little two-letter combinations for all of these guys. So what we're going to do is we're going to take this and we're going to store it in a new list. We're going to get rid of this. Now I'm going to put some of these little asterisks in here. That puts it up to the top of the list, and that's so it's easier for us to sort of demonstrate this and not have you have to look through all of my boring test lists in this account. You can call it whatever you like. We'll call this Dow Jones Industries. Okay, so now we've got a list, and here is our list, stack ranked, of everything throughout the whole industries. Very useful thing. With our summary view, we can do all of our summary sorts of tools. We can go out and say, well, I want to do a 1 month. I want a little bit more scope and time, so we can sort of see longer term performance. We've got our other tools such as the search, which is actually quite powerful in lists like this. So we can say, okay, I know it was DJUSC something, but I can't remember the second letter because only 3 people in the world know them all. So I can type that in and I can get a list of, oh, okay, now I can find, I was looking for gambling, it's CA. Or if you're looking for a particular thing, I'm looking for home improvement or home construction. I couldn't remember which one it is. So you can use that. That little search tool on the summary page can be very useful. So next we're going to do a little trick that I use for most of my lists. And this is very nice, but it's, again, sort of we're in the forest and it's the whole forest and the trees problem. So I'm going to do is I'm come down to the edit screen. Come all the way down because there are a lot of them. And I'll enter a new item in here. And what I'm going to do, this crazy B and end B is what we call an HTML markup. It's sort of the language of the web page, if you will, and it basically will bold this. So it again will help me find this in the list. VTI. VTI is the Vanguard Total Market ETF, which is basically one share of everything, and similar to the S&P 500, but much more presence of things like small caps and mid caps. So what I'm going to do is I'm going to add that. I'm going to go back to my summary view. I'm going to rank by change, and I'm going to be able to scroll down. And there we are, nice and bold, total market. So what this does is sort of brings a little bit of an outside view into this list to sort of give some context to everything. So what I can do now is I can look at this VTI and know that that's basically the general market performance. So what this tells me immediately is everything above this line is outperforming the market. All right, and then we'll go back to maybe a 1 month, get a little bit more scope. So everything above this line is outperforming the market, and everything under the line is obviously underperforming the market. So now at least we have some idea of what's good. I mean, if you just took a look at this and you'd said, well, it's down 1%, is that good or not? Well, in 2008, down 1% was actually probably pretty good for a bulk of that year. Maybe 2013 or 2017, not so much. So having this one little item in here and that brings some outside perspective into us can be a little bit of a help to sort of give us an idea of what, again, relative performance is. Like Tom was talking about when we were looking at Goldman Sachs and some of the others, you kind of want to know how this industry is doing relative to the market. Well, if you add this little additional symbol, you can get a view of that. So now we can use this list in a couple of different ways. We can use it to drive some research, like the scan engine helps us find things where we have a concept, but we don't know what we're looking for. We can use that list this way. We can also use it as sort of a confirmation. So how can you use this list as a driving force? Is to say, all right, I know where my VTI was. I know what the market is. I know that these are the best performing industries over the last month. So now, similar to what we can do with the sector summary, we can go in and find the best industries. We can then take this list. We maybe make a short list. We can see oil popping up a number of times, so we know the energy has been strong. We've got some mining, some maybe materials are looking good. Some energy, oil again, defense, coal. So we can get an idea pretty quickly of where, in this case, the last month, where are the hot spots in the market? Because as somebody said, there's always a hot industry somewhere in the market, even in a down market. So this can be used to sort of direct you in a certain area to start looking for things to find. Now you can then go to maybe that industry group, which allows you to click on an industry and get all the stocks within the industry, like Tom showed us earlier. You can go to the scan engine to then restrict your search to just an industry or a sector and then get some further ideas. But this is another way to sort of get a list of places to start doing some research. We've also got all of our regular list tools, and some of those are sort of corroborating evidence, I would call them. Say, for example, correlation. If you wanted to set up a list of, say, a portfolio, and you wanted to do it with individual stocks instead of ETFs, and you're going to, say, select 25 to 50 individual stocks, you don't want to necessarily choose them all in buckets that are highly correlated, because then when the market goes down, everything you own is going to go down. It's great when the market goes up, but it's not really as defensible as having a mix. So what we can do is say, well, let's go down and look at some of the industries that will zig when the market zags. So we can get down in this area here where there's somewhat less correlation to the total index. And up here in our correlation, our default is the SPX over 20 days. We have multiple time frames. So maybe if we're looking a little bit longer, we can go out for a longer correlation, but we can scroll down here to the bottom area and start to see areas we may want to put some of our chips in that will survive a downturn when most of our high-tech sorts of high-flying stocks may get hit. And you can see a lot of the areas that we would expect, which were sort of bond-type proxies. You've got utilities, real estate trusts, items that will pay a lot of dividends, items that may be considered staples that people will buy no matter what the market's doing. The sin groups here, we've got tobacco and beer. So you can maybe use this to sort of see areas that you would put some things into that you wanted to have a little bit different correlation. We've got seasonality. Again, this is a huge list. I wouldn't recommend that you would probably just go through every single one of these in mass. But like Tom was saying with Goldman Sachs, so maybe I'm looking at buying Goldman Sachs and I want to say, well, I wonder what the industry group does. So maybe I want to go in and see if I can find an industry. I don't know if this is the correct one, but we'll just pick it and say, well, what is the industry doing? Well, maybe, May is coming up. Looks like this one's actually does quite well in May. So maybe this is what I would say corroborating evidence. Like Tom has mentioned, Aaron's mentioned, Gaddis is really big on this. The idea that you want to find a stock that's outperforming its sector and its industry. This will give you sort of an idea of like, well, if I'm going to look at a stock, how does its industry work? Because you may have a case like Goldman Sachs where it's doing well, but it's still not well against the industry. So you may want to see what does its bigger part of its pack do, and something like seasonality will let us go look at that. We've got our RG. We've got a lot of symbols here, so this is starting to get a little bit messy there. But we still can come down to this list and see areas that are moving, sectors and industries that are moving in and out of the various quadrants within the RRG. So this is another place you can do maybe some proactive research and where you want to look further. And then we've got what we say sort of a visual sorting. I was on a couple of times ago, and we talked about market carpets. We can put all of our items here in the market carpet. We can push this out. The summary table is great way of looking at it. It's got specific time frames. So you've got 1 month, 3 month. The market carpet allows you a little bit more flexibility. You can go down to individual days, but you've got about a 3 month range. I can see here very quickly over the last 3 months that in general, the performance of the market hasn't been that great. A lot of red there, not a lot of green. Price is the most common. We won't go into this because we've done it before, but we've got some other areas here. We can look at other aspects of items, which is sort of a quick way of doing a visual sort, visual search, visual scan, whatever you want to call it. So that's one method. We can also use this in candle glance. I've got my candle style there. I can then use custom time frame. It would go maybe 6 months. I can add an indicator. Again, we can do something a little bit more broad. We can find ways to sort these. So this is, again, a way we can do a little bit of sorting and searching to see relative performance very quickly without actually getting the scan engine involved. The rest of these are large-scale views. If you've got a lot of time, you want to go one by one through the industries, you can do that. My personal style, I just don't have the time, so I prefer to use these sort of higher visualizations of the industries in general to get a broader view. But you can certainly go through and look at gallery view and scroll through. Like say, you can look for a specific one or scroll forward and back. Again, there are a lot of them. This is not probably the fastest way to go through and look at things, but it's certainly, there's detailed views you can create if you want to do a little bit more research into a very particular industry area. And of course, one of my favorites is the scan engine itself. Now that we've got this group, I can get rid of this guy. I can come down to our chart lists, and I can choose my list. And now I've basically restricted all of my scans to this particular list. So I can come in now and do any number of different things that I'm, excuse me, would be interested in a industry view. So I can say, well, let's look at EMAs. I can say, maybe I want to see something where the close is above our 20-day EMA. I know Tom looks at the 20-day EMA very closely, so maybe we want to restrict our list of interesting things to anything where the current close of the industry group, the daily close, is above its 20 EMA. If we're doing this scan daily, maybe we want to change this to crossing, because we want to see, has it crossed above its EMA today? So we've sort of, in effect, got a breakout relative to the EMA. So we can run a scan on that. We can find all the things that are crossing above their EMA today, because we're having a nice strong day today. So some of these guys, like our internet, maybe these guys are the ones that are starting to take off. Here's our home construction. Tom's talking about the home starts, durable house products, homes, those sorts of things. So this is a way you can maybe find a group there. You can, Aaron uses the PMO. We can look for items that have a PMO signal line crossing the PMO. Maybe they're starting on a new uptrend in terms of the PMO, or downtrend if you're looking to maybe find areas that you want to look for shorting if you're into that game. Or sometimes what I will do is have an alert, because the alerts are basically driven by scans. If I want to know anytime a sector industry group has a PMO crossing on the downside or the upside, I can create an alert to tell me every day if an item in this list goes up above any sort of moving average, PMO, MACD. You can do MACD centerline test. You can basically do any sort of scan, but limit it just to the industries. So you can keep sort of a very industry focused aspect to your research if that's the way you want to go. So that's sort of my demo on the Swiss Army knife of industry. So everything is based on creating this list. And then once you have this list, you can use it in all sorts of different ways.
Wow. I don't even know what else to say. Wow.
I was hoping I could be able to tell you one thing you didn't know about industries, because I know you spend a lot of time working with the industries.
Well, I didn't realize you could do so much in the chart lists with these industry groups. And especially, I thought the correlation was really fascinating. And when you stretched it out to like a year, one of the things that I look at in a bull market is the rotation. I mean, sometimes the rotation we talk about, from day to day or week to week, but I'm talking about longer term rotation. I mean, if you look back, for instance, at just say consumer discretionary in general, that sector really struggled for a while during the bull market. It just really started to pick up in the latter part of 2017. And so just following the correlation going back a year, if you go to the bottom and look at some of those groups, I mean, I agree with you. I think the REITs, the utilities, when you're in a bull market, those are going to be areas that are going to underperform. But a couple of them, like the media agencies, which is DJUSAV, that's like fifth from the bottom, sixth from the bottom. That's a group that I'm actually keeping an eye on and been watching. And there are a couple stocks I mentioned earlier. I think when I did the media agencies, I did Interpublic Group, which is IPG, being one of the areas of strength within that group. And if you start to see that group take off, those are the types of stocks you want to be in. I didn't realize you could put all of them in here and do the correlation like this and identify those areas of the market. And I have one question for you on that. Up at the top where it says to show or hide certain things, can you bring up in this chart list the sector?
Not well. See, in correlation view,
not in correlation, but
in
I think it's summary.
Yeah, we don't really have. It's an area. It's kind of interesting. The indexes themselves, we don't put into the concept of sectors. Although this is like the one place where it kind of makes sense. I mean, I have the sector and industry hidden in this particular view. But yeah, that would be an interesting idea.
Under that show hide columns, I would could you pull up the sector there?
Yeah, it would be empty. We don't really attach sectors to the indexes. Although this is probably the one place where it's pretty obvious, because a lot of times you'll get indexes that can kind of span You know, if they're aggregates or whatever, you can get a little tricky. But a lot of these, probably we could try and take a look, because I agree that it would be very useful.
The thing I was thinking about there is if you could sort by the sector and then look, well, you don't have the correlation on here though. Okay, never mind.
Right. It's right.
Because
So
if I could sort it by sector, and then within the sector, if I see a sector like consumer discretionary that's starting to make the breakout and starting to look better on a relative basis, and then I could sort it and get to the industry groups within that have maybe had a negative correlation that are starting to make a rebound, that would be pretty interesting. I mean, we can do it. I can do it. That's basically what I do when I'm looking at these different industry groups relative to the S&P, but it's not something that would be in that chart list.
Right.
Yeah.
Go ahead, Aaron.
Oh, we got a lot of questions, and I know we go over this like a lot, but people are wondering, you know, you get in here, how do you find out the stocks that are within that industry? Is there an easy way from this view?
Not from this view. Again, we've sort of created a list that's specific to us. So there would be generally no way that the list code would say, okay, I know that this is an industry, so I'm going to automatically create a link to the industry group. It's sort of a two-step thing. What I would have to sort of have people do is say, okay, the retailers index, or whatever, USGT, I would come over to my summary and I would look up GT, and I find that it's in consumer staples or whatever. So, you know, if you have two tabs open, you can do it, but that's at this point probably the easiest way. There's no very quick way to make that link
from this view, because I know if we go to the sector summary, you can kind of move through there. That's we always show everybody, but everybody still asks the question every single show.
Yeah, we sort of like carved our own little tool here, so it's not quite as integrated to the rest of the tools as if it were its own standalone tool. And maybe it's important enough that someday we turn it into its own tool.
Cool.
Awesome. Any other questions, Aaron?
That was really the main questions, was how to get to, you know, the industry, the stocks within an industry group once you find one that's interesting. So that was really the main questions that we had. You can go maybe check into that chat room before you go, Bill, if you have a chance, just to see if there were any we didn't answer.
This was really fascinating because, again, I think sometimes, you know, I spend a lot of time in the site, and I did not realize you could do all of this, which is pretty fascinating because that's a lot of information you just showed us, and really appreciate it, Bill.
Yeah, when I started kind of digging into this, because we had done that show, I don't know, maybe a month or two ago, about just writing a quick scan to do outperformance, you know, finding an industry to outperform. And I started thinking, every time I thought, oh, you could do this and you can do this. So yeah, there is a lot that you can do here.
Very cool. Well, we certainly appreciate your time. Thanks for stopping by and filling in for Grayson today. And always a pleasure to have you on the show and showing off some tips and tricks at StockCharts.
Great. Thanks, guys.
I appreciate it. All right. And there he goes. I was like fascinated looking at some of that stuff. I didn't realize that you could pull that up in the chart list and then show the correlation and all. That was pretty cool. I mean, that, you know, because I look at the relative strength so much, and being able to see what works and what's not working versus benchmark, and having it in a table form like that was pretty interesting.
Yeah, absolutely. I know that I have chart lists that I scan on for my timing signals, but you know, if I wanted to go in and you know, select a list of just, you know, the software index, for example, you know, knowing that that's available to just sort all of those and then maybe work backwards from there, you know, do my PMO scan on a particular industry group. And that would be a way to find out some of, you know, the big momentum movers based on my own indicator set.
Yeah, Bill doesn't realize it, and everyone in StockCharts doesn't realize it, but when they come on the show and they're giving all these stock charts tips and tricks, what they don't realize is that now that I'm starting to understand a lot of this, I'm going to corner them on the cruise or at StockCharts, the ChartCon, and I'm going to get a lot more information while I'm out there. So they're actually creating more work than they realize, but hopefully Bill's gone, not listening to any of this.
I'm going to say man overboard.
Oh, anyway. All right. Well, we got about 10 minutes for the spotlight stocks. So Aaron, why don't you go ahead and start? What do you have?
All right, let me go ahead. I've got about 6. What I ended up doing, I wanted to spotlight what, what's been on the ticker cloud. So I wanted to look and see if there was anything interesting from the ticker cloud and if I had any signals or anything like that. So I came up with like 6 stocks, and a lot of these I know everybody's sort of interested in because they do hit the top of that ticker cloud. So I'm going to go ahead and just look at a couple of these because there were some very interesting chart patterns and such on here. And I'm going to bring you all back to my divergences workshop from Friday. I went ahead and marked a couple of what we call hidden positive divergences. And that's where you look at the rising bottom, what the indicator bottoms did. So since the indicator bottoms were moving down, but price bottoms are moving up, that's actually a hidden positive divergence. So that suggests to me we're going to see at least a move up here to test, about 45.50. And there's a really good chance we're going to see a breakout here on Cisco. And notice the really high scooter. You can see if we drew a trend line through here, OBV has busted up through that. I'd like to see it come up here and test some of these tops that we had on it. But ultimately, I think this looks pretty good. And notice we just got a PMO buy signal. So I thought that was good. Chevron, and I know we talked about this. Oh gosh, was this an agree or disagree or what would you do? I can't remember. But this one I had already, it was great. I went in there and just looked, and I had already annotated this from when we did that segment. And what I had noted was this ascending triangle and the fact that I was ready for a breakout there based on a rising PMO with that buy signal moving up. Well, since then, we did get that breakout from that ascending triangle. There's still plenty of upside available here to get up to test the high, we had in January before the market fell apart. So we're trying to make our way back up. I like the fact that it has executed this particular pattern, and you can see a bullish confirmation here. We've got rising bottoms on the PMO and rising bottoms on price. And that's a confirmation that tells me that we're looking good for this breakout. And then also notice OBV volume broke above the declining tops. So I thought that was an interesting one. Freeport McMoran, FCX. Nice rising trend channel. Just got a PMO buy signal not too long ago in oversold territory, and it's coming right about the same place we saw the last bottom. So I thought that was a good thing. OBV volume's kind of flat, but we're in a nice scooter situation here. We have it in the hot zone. So I would be looking for higher prices. Again, we're just about ready. We got a 520-day EMA positive crossover. So that gives me a short-term trend model buy signal. I'm waiting on the 20 to pass above that 50, but I think with this rising trend channel and nice PMO setup that FCX looks pretty good right now. Skechers, and I know we talk about this one fairly regularly. And the last time we talked, there was a flag formation. I was looking for the breakout from this trading channel, and sure enough, we got it. The PMO buy signal came in. I was waiting for that. And we can see that the PMO is still rising. It's rising with price. So that tells me that there's a bullish confirmation. Notice OBV is rising, hot zone for the scooter. So Skechers, I think, looks good at this point. GDX, this one is almost always at the top of the ticker cloud. And interestingly, I just got a new intermediate term trend model buy signal on GDX. Can also see OBV volume is rising. We've got the scooter trending higher, and now the PMO has made its way above the zero line. So we got that PMO buy signal in oversold territory. I do like to see that, but I always feel a lot better when the PMO gets above the zero line. And that's what we have here. Combine that with that trend model buy signal, and I would be looking for a breakout here, probably that could take us all the way up here into that $25 range to test that. But be careful here. You know, gold, I'm not very bullish on gold right now. The miners will travel somewhat in the direction of what gold does, but because they're also companies and they're subject to what's happening in the market in general, they will not always correlate. But just so keep that in mind. I don't think gold's going to be doing so well, but the fact that, you know, as a company, we can see that the gold miners as companies, they can travel in a different direction, and they usually travel with the market. And I like this intermediate term trend model buy coming on a rally in the market. Finally, I'm going to look at SMH. This is the Semiconductor Etf. And of course, we know semiconductors are having a great day. We got a breakout above this declining tops trend line. We have a hidden positive divergence again. So that is telling me to expect a rally to continue. And look at this beautiful PMO. We got a nice bottom on it, and it's heading up for that crossover buy signal. Again, like to see it get above zero, but the fact we were able to really clear those overbought conditions nicely, and that's why you got that deep bottom below the previous bottom, and that's considered a good thing if you've got a price bottom that's higher. Did not require a huge breakdown in price in order to get the PMO into oversold territory. So that's why those hidden divergences where you're looking at price first for the rising bottoms trend line and then looking over at the indicator to see what's going on. And so those were the ones I wanted to point out. Did you have some that you would like to spotlight as well, Tom?
Sure. Let me take the screen here for a sec. And I thought what I would do is, well, first let me just pull up the S&P so I can get into, I'm going to pull up the S&P 500 chart list. And so what I think I'll do is first start and show how you can show them all. You can set up a chart list and just drop all the S&P 500 stocks into it. I've shown that before. Don't really have time to show it again, but we'll look at that again in the future. But once you have all the 500 stocks in a chart list, what you can do is then view that list, kind of like what Bill was just showing you, all these different ways of looking at seasonality, candle glance, the market updates that I do at the opening of the show. I use candle glance. You can do 10 per page, similar to what this is. I could scroll down and there'd be 10 on each page. And then you just have to go through each one of these different pages to look at 10 more until you go through all 500. You can pull it up using the correlation indicator, which is pretty cool. But I'm going to go into the summary here. And what I wanted to show is just how, when you're thinking about spotlighting stocks, one simple way to do it is to pull up the S&P 500 and to sort it by the percentage and find out real quickly what is driving the market. This is one quick way to zero in and spotlight the stocks that are moving. Now, Netflix is up about 9.5%. It is making a breakout today with its strong earnings report that came out. We've already seen 23 million shares take place in the first half of the day. And if we pull the chart up, you're going to see this is a stock that definitely should be spotlighted. I mean, it's breaking out. Look at the volume coming in today. This is not a light volume day, even in terms of the volume we've seen in the past. This is a massive volume day. And so Netflix, which had a higher high and a lower PPO, had that negative divergence. We went down and did what I look for, which was a reset. We went all the way back down to the 50-day moving average. We also saw the PPO go to the center line just below. And now we are starting to turn up. Momentum is just now accelerating, great volume and a breakout. So Netflix certainly is a stock worth spotlighting. There were a couple of others. One in particular I want to talk about is CMG, which is Chipotle Mexican Grill. I think this is a stock that is worth considering. It's a company that's been under pressure for quite a while. Of course, I think it had the E. coli breakouts or whatever, maybe a salmonella. I don't remember what the poisoning was, but I know I was living in Virginia for a while, and they started talking about that in Virginia restaurants and other parts of the country, and I stopped going. And I used to go into Chipotle a lot. I really liked the food, and I used to go in, and the lines would be out the door. And, it didn't matter what time of day you went. It was always packed. And after all of the scares came out and they had all the health issues, literally I went in there one day at about 12:30 and there was 2 people in line in front of me. I was like, wow. I mean, the change, and the stock showed it. I mean, if we look at a long-term chart on CMG, you can see, I mean, we were up at 750, and this is when the scare started. The stock fell all the way back to 250. It lost 2/3 of its market cap, and it did hit a major support level, as you can see, and it started to bounce. Now, why would I be interested in CMG? Well, if you take a look at that relative chart that I like to pull up, here you can see, first of all, we're at a pretty key area of resistance coming across here at about 340 to 350. We're currently trading at 337. But if we could make that breakout, obviously from a absolute perspective, we would be making a strong case for the stock. The restaurants, after being very strong, the industry group that CMG belongs to, was very strong heading into 2018, had that first really big move to the downside, but the strength in the group has been building again. CMG relative to its peers has finally, after downtrending for quite some time, seems to have stabilized. And if we could get a relative breakout along with a price breakout, I think this would bode well for the stock. And you can see it also is stabilized relative to the S&P 500. So I think the thing to watch is, does this move up in the restaurants versus the S&P 500? Does it continue? And if we start to see that relative strength in CMG among its peers, and we get that absolute breakout, I think CMG is a stock that's worth spotlighting today as well. So that was just looking at this chart list and just quickly zeroing in on a couple of companies that are near the top. I think it helps to highlight what's going on in the market. And to the flip side, I could simply hit this and it brings up the ones that are not performing well today. You can see the sectors, you can see the industry groups. You could sort this whole thing by scooter rank. Obviously, there's a lot of things you can do with it. So I just wanted to point it out that way. And with that, let's go ahead and show you a quick summary of the spotlight stocks we just went over. You've got Aaron's list, you've got my list, and we will now move on to the 10 in 10, and I'll let you take it back, Aaron.
Absolutely. So we had about 34 symbol requests. There's still a little bit more time to like symbol requests that you want as well. So go ahead and start liking them. I can't really add more to the list at this point because we're going to get this started. I'm going to look at the RRG real quickly. Actually, you know, it would be interesting is correlation. We have not done that. So we can see which ones are highly correlated to the S&P and which ones really aren't. So we're going to look at a couple of these. I try to pick some from different sectors. Maybe I'll look at a couple that are highly correlated and some that are not quite as correlated with the market, and we'll see what we get. So let's start with the first one is Planet Fitness, PLNT.
All right, PLNT. Well, the thing I see first off on Planet Fitness is it's coming off a really nice uptrend. Volume came in on this gap up to clear the overhead resistance there. And since putting in this uptrend, you can see I think we've got a nice little rounded cup that has formed. We've got the highs back up near 40, which is where we topped in the second week of March. So I think we've got a nice bullish pattern in play. A pullback here to test that rising 20-day and maybe hit this short-term support around 38.5, I think would be a buy signal. So I like Planet Fitness. I think it looks good.
All righty. So let's see what is our top vote getter for the chat room. Micron, MU.
All right, Micron really not performing as well. I think we got to get this breakout above about 53.5 before we're going to see some outperformance here. But going across here, you can see the top. We had a little bit of volume coming back in. We put in a nice bullish engulfing candle, but we failed at the 20-day moving average. Pulled back, I think tested a major support level here, and I actually went a little bit below it. But right around $50 or just beneath, you can see the breakout. We went all the way back down, trying to turn back up. Now, there's two things I'd watch. I think it would be very bullish to break back up above 53.5 to 54. And to the downside, I think losing this support level, this was on pretty good volume on this gap down. I think this was an exhaustive gap of this downtrend right here. Anytime you get that hollow red candle, I think that's a good sign because you're closing back above the open. Everybody's panicking. Those that got in at the top are selling, but you got buyers coming back in to support it, and that could mark a very significant bottom. So I think I would even draw one more line in here and probably get rid of the one that's in between. And that is the trading range that I'd be watching on Micron. I think a breakout above 53.5, 54 is bullish. A breakdown below about 47.5, I'd be very careful. I think in the meantime, this is an accumulation zone. I like Micron. I think it's going to make another run to the upside.
Okay. I think you mentioned it, but I don't know if we actually looked at the chart. E-Trade, ETFC.
Yeah, this is one of the better performing stocks in that investment services group. And you can see it is making a breakout today, or at least intraday, it's making a breakout. I think this is a bullish looking chart. And I think this is why using scooters within an industry group, if you like a group and you're looking at a stock like a Goldman Sachs or Morgan Stanley, if you go back into the group and pull up the scooters, I think sometimes you can talk yourself out of those stocks and go with what's working. And ETFC, E-Trade has been working, got a nice potential breakout here. Now, I would be a little concerned if we go back down and close below 58, leave this tail, because we will have had an intraday breakout above these highs. That would make me a little nervous in the short term. I still like the chart, and I think eventually we'll get the breakout. But if you're a short-term trader and you get that false breakout, I would get out and maybe look for a 20-day test to re-enter.
Okay. How about Paycom Software, PAYC? Also another popular one in the chat room.
Okay. Well, we had a negative divergence. There's a lot going on in this chart. Trying to decide if I want to show it here or on a relative. I'm going to go to the relative chart. So probably won't focus on the negative divergence. But here was the negative divergence. We didn't have I don't have the PPO here, but it was lower as this top was going in. There you can see a reversing candle right on the top. That combination usually is a sign for me to get out in the near term. We did pull back for about a week, almost got to the 50-day, and now have started moving higher. But I wanted to show this one on a relative chart annotated here, because what we have is a very strong stock in a very strong area of the market. So here you've got Paycom continuing to move up. If we could get this breakout at key resistance right there today, that would be bullish. You can already see volume is pretty heavy. We're only halfway point of the day. It looks like we're probably going to do 1 million shares, and that would be among heavier days for Paycom. So I think that is a bullish thing. But if we go back and we look at the group, here's software. Talked about software. Been talking a lot about software. Very, very strong area of the market. Paycom relative to its peers, very strong. Paycom relative to the S&P, very strong. And software relative to the S&P is strong. These are the kinds of stocks you're going to outperform the S&P 500 trading. Now, it doesn't mean I buy it at any price, but if it pulls back, let's say it fails to make the breakout here and pulls back and hits that rising 20-day moving average, this is the kind of stock I would want to own. So I think Paycom looks very interesting.
Okay. Let's see. The next one, 3M. MMM.
Yeah, 3M. And I'm going to go ahead and again use the relative charts style that I have here. But the downtrend, it came back down, took out this prior low. There is some good support around 210 that I will point out. So you can see a lot of overhead resistance right at about the 210 area, and then finally made the breakout. We came all the way back down and tested that. We're trying to get back through the 20-day moving average, and I do think that is important to reestablish at least the short-term bullishness of being above your 20-day moving average. But here is part of the problem with 3M. First of all, it's in an industry group that has been moving lower. It is one of the strongest performers in the group, but it seems maybe to be flattening out. We'll have to see if that continues. But here you can see it's underperforming the S&P. It topped against the S&P months ago, and the group is wildly underperforming the S&P 500. So when I look at a chart like this, yes, it's done pretty well, but it's in a weak area of the market. This area is not really showing any strength yet against the S&P 500. So it wouldn't be one of my favorites. A short-term trade, off of support like this, is certainly okay from time to time, but this isn't one that I would necessarily want to hold at this point.
All righty. See the next one, Kinder Morgan KMI.
All right, KMI. Well, we have gotten through the 20-day, which is a bullish development, and it does look like maybe we have begun a channel. So I'm going to just highlight that channel. But right here, if you connect these lows, and then I think Bill, during his annotation presentation last week when he was on, showed you that on a Mac, if you push down the command, that left clicker, you can get that same angle on the line, and then you can just drag it to where you want it to go. But it looks to me like this is that first initial top. We've come back down and established these lows, and now we've gone back up, tested again. We need to get through that 50-day moving average. Looks like maybe we could use one more pullback here, but it is in an area of the market that's improving. It has not been a great performer, so that's going to have one X against it, but needs to get through that 50-day moving average, and also needs to negotiate price resistance. There was your price support. We broke down. We just tested it and failed so far. I think a move through about 16.25 would start to convince me on KMI. Until then, probably just have this one on the radar.
All right. See, the next one is PPL Corp. PPL, this is a utility, conventional electricity. I did just get a buy signal, just for those interested in intermediate term trend model buy signal on XLU, the utilities sector.
All right. I have to admit, number one, I'm a momentum trader, and I'm also bullish. So I'm going to almost always stay away from utilities, consumer staples. I mean, I might find an interesting stock here or there. But, I mean, clearly, I don't probably need to explain too much. This one has been underperforming the S&P 500 for quite a while. It's not in a group it's in a group that's underperforming the S&P, which is a problem. We did have a positive divergence develop. I won't annotate it, but here you can see equal lows with a rising PPO. I look for a 50-day test and a center line test to reset, and that's what we've gotten. I could see this turn right back down at this point. I would need to see some high volume move back up to the upside to be more convinced here. I think you've also got overhead resistance between 28.50 and 29. Here was that reaction high. Here was the prior low. So there's a little bit of a zone here, and you can see that really this stock struggled early April to get through there. I just see an underperforming stock here. So until I see relative strength and a breakout, I would avoid it.
All righty, let's see the next one for our Canadian friends. BTE.TO, that's Baytex Energy Corp, oil and gas producer.
All right, nice strength. The only problem I see is that we're getting overbought and we're approaching resistance. But other than that, I like the stock. Here you can see that's the overhead resistance that we need to negotiate, get through 450. But we have been straight up here on a line now, moving up about 30%, maybe a little more than that, just over the last 2 weeks, 2.5 weeks. Nice volume, so I think there's accumulation taking place. I think that's good, but I would need to see a pullback. And an area I would watch, there was a multiple tops at 390. You can see the rising 20-day coming underneath. So if we could get a pullback here, about 10% or so near that 390 level, I would enjoy my reward to risk much better there.
All right. The only request from the cyclical sector, Foot Locker, FL.
Yeah, this one has been a little bit of a laggard since topping back in early January, starting to roll back over. I don't know if this is earnings related. I'm guessing it probably is. So I'd have to go back and look. It did hold on to the prior support level, so it could just be a case of prolonged consolidation. I'm going to draw a couple lines. Right there, you can see the tails, both of these on very heavy volume days, holding there. So 38 is clearly a major support level for Foot Locker. To the upside, you've got resistance all the way back up at about 53. Now, there are some support levels and resistance levels, in between. But I think the big picture here is 38 to 52. As long as it stays in this range, in fact, the closer it gets to 38, the more inclined I'd be to buy it. I think that the move to the upside here on heavy volume, and holding it on the gap down on heavy volume suggests to me that the stock is still okay, but a close below 38 would change all that.
All right. Our final one is the uranium ETF, URA.
Broke the downtrend line, which is nice. It is up against some resistance. So let's take a look and annotate both of those. First, I would say here on the high, you can see that there has been, there was clearly a downtrend that was in play, and that has been broken here in April, back to the upside. And then the price resistance that I would be watching, there was a reaction high here off of this downtrend coming back up in mid-February, and now we're rising again. Now, personally, I think this stock or this ETF looks a lot better this time coming up, because as it's been coming up, you can see the PPO has moved into center line or above center line resistance. We never even got close to that back in February. Also on this move, notice the 20 is crossing above the 50. So you've got a golden cross. That never happened back here in February. And we're holding the rising 20-day. In this case, we actually failed at the 20-day, moved lower. So I think things have changed a lot for the stock or for this ETF. I'd like to see it break out above 1390. That would be confirmation to me. In the meantime, if you like it, I think a pullback to test the rising 20-day is your best reward to risk entry.
All righty. And that concludes our 10 and 10. And the stock symbols we went over are right there. I will get these up after the show into the Market Watchers Live chart list. You will find that if you go to the blogs page, click on the Market Watchers Live blog, and at the top you'll find a link to the Market Watchers Live chart list. And that's where you're going to find the last 3 days worth of 10 and 10 symbols. With that, it is time. It is that time to talk about that amazing conference that is coming up in August. And let me go ahead. If you go to stockcharts.com/chartcon, you will be able to get to this page. We have an online conference coming up for those of you who don't know, and that will be in August 10th and 11th. You can register and get early bird pricing right now. And again, it's an online conference, so you don't have to come in person. And there's information on how it works, the dates, and then there's your early bird pricing. Here are all the speakers that we are going to have. And there are so many technical, as I like to call them, tech titans on this list, from Tom McClellan, Dr. Elder, who I always talk about his book. I love his books. Martin Pring, of course. I mean, Greg Morris. This is going to be quite the conference. So if you'd like to join online, you can do so with early bird pricing at $199. And the great thing is you get to keep the recordings. So if you watch any of the Stock Charts TV, you've seen some of the clips, the segments that we did during the 2016 ChartCon. Well, the people who attended that online have those all on their hard drive somewhere or a link somewhere, and they can look at them anytime they want. And that's what you'll get to do if you join the conference online that way. So highly recommend you check it out. Great subject of reducing risk. Again, stockcharts.com/chartcon, and you can learn more there. And with that,
That's good.
Yeah, I know you're looking forward to it, aren't you?
Yeah, and I tell you what, the time is going to go a lot faster than you think. I hate to say that because I don't really want time to move that fast, and especially my summertime, it's golf season, but it will move fast. It's less than 4 months away at this point.
Wow.
And, just when we started talking about this a couple months ago, I mean, 6, 7 months out now, all of a sudden, we're less than
It's
4
here.
and getting closer.
Indeed. And that early bird pricing will be expiring soon. So take advantage, just get her done after, you got your tax refund, hopefully, or didn't have to pay too much today. Save some of that back and go ahead and register for ChartCon. And with that, I'm going to go ahead and look at our market update. What has been going on since we have had our discussions? And I'm going to adjust this as I usually do for adding Canada in there. And let's see, let's look at XLU just because I did get that intermediate term trend model buy, so I'm curious. All right, as we can see, the markets were off to a great start. It looks like we're stopping and consolidating. We're pulling back just slightly on the Dow, but I wouldn't be too worried. We're not losing this support level here from earlier in the day on a pullback. We've got the Nasdaq also on the rise, but consolidating. Russell 2000, same, up 1544. The TSX is up, but it is also pulled back, probably paired about half of its gains at this point, but it's still up quite a bit on the day. Treasury yields are slightly lower right now at 2.82. And we can see that UUP is gapped up, but now it is rounded off and is heading back down toward yesterday's close. See, commodities are down slightly. USO down slightly at 1336. Gold started the day in the negative with a big gap down, but it has now made its way back into positive territory. GLD now reading at 127.68. The VIX continues to travel lower. We're now seeing a reading right now, Tom, below 15. We're at 1498 right now on the VIX. And as I said, I got a new intermediate term trend model buy signal on utilities. They've been in a very nice uptrend, and it appears we're going to hold that rising bottoms trend line and go on up and move a bit higher, probably test it, at least test that intraday high at about $51. And that concludes our market update. I want to actually, you know what? Before I conclude it, I am going to show you the market summary. And there we go. Let's look at percent change. I haven't looked at the international ETFs in quite some time. I'm very curious. So let's go down to our international ETFs. Brazil up almost 2.25% for EWZ, having a spectacular day, followed by Sweden and Germany, but those are only up just above 1.25%, not enjoying the rally that Brazil ETF is. Taiwan and Russia are the only two in the negative, although the India ETF is currently unchanged, so it could join with Russia and Taiwan in the negative category. And with that, I'm going to conclude the market update and pass it back to you to get started on agree or disagree, or if you had something you wanted to add to the market update, Tom. I am handing this.
Yeah, I just wanted to say the Nasdaq 100 is outperforming pretty significantly today, and I just wanted to bring up a long-term chart because, again, I'm trying to outperform the benchmark S&P, and one way to simply do that is to participate in those Nasdaq 100 stocks. You can see that on a relative basis, this is $NDX $SPX. So this is not telling us that the Nasdaq 100 is going up. It's not telling us really anything except the relationship between the Nasdaq 100 and the S&P 500. And you can see after bottoming in 2002, we have been in a long-term uptrend. And you might look at this and say, well, why in 2007 and 2008 wouldn't it go down? Because it is riskier assets. Nasdaq 100 are made up of a lot of risky technology companies and consumer discretionary and so forth. So why wouldn't it go down relative to the S&P? And if you think back to the nature of the bear markets, every bear market is different. The 2000 to 2002 bear market was technology driven, if you remember. That was the dot-com crash, that bubble. Many, even stocks that were, that had earnings like Cisco took major hits from back in 2000, 2002. So you can see the NDX on a relative basis was absolutely crushed. And I think probably if Carl was with us right now, Aaron, he would have said that we had quite a bubble formed in the NASDAQ 100 and in technology in general back in 1999 and 2000, and it popped. That bubble popped.
He did speak about it back in 1998, 99 on decisionpoint.com.
Yep.
We were seeing that.
Yep. And so the last 15, 16 years, we've been going up. Now, the reason that you don't see a big drop in 2007, 2008 is that was a financial crisis. The NASDAQ 100 ignores financial companies. I think, well, currently, I don't know what was in it back then, but I know currently of the 100 stocks, I think there were 4 financial administration companies like, I don't know, PayPal. I'm not sure if Square is in there, but there are, I think, financial administration, but there's no banks, none of that. The companies that really got hit, the areas of the market that got hit the hardest in 2007, 2007, 2008 were not components of the Nasdaq 100, and that's why it held up pretty well on a relative basis. But the Nasdaq 100 is an aggressive index, and you can see that money continues moving higher. When folks say, you know, we're in a bear market or we're heading into a bear market, I look at a chart like this and I say, I don't see it. Not if it's going to include technology and consumer discretionary in some of those areas. So anyway, I just wanted to point out, because this is a longer term, big picture chart. And I know on the show we do a lot of short term stuff, but this I think is a pretty interesting chart to follow from a longer term perspective. And I think it's just one more indication that money does continue to rotate into aggressive areas. And that, in my opinion, is what's going to continue to fuel this bull market. So with that, let's get into the agree or disagree. And here's the thought, or here's the statement. The statement is declining volume on the latest S&P 500 rally suggests it won't last. And of course, you know, I'm a big fan of volume, price volume. That's my number one indicator, that combination. And so what we're referring to here is, as the S&P 500 has been moving up here in April, you can see the volume just kind of tailing off. See how when we were selling off, the volume was well over 2 billion shares. And now as we make the rally, the volume's drifting back lower, below 2 billion shares. So here's the agree or disagree. Declining volume on this latest S&P 500 rally suggests it won't last. You have thoughts? I mean, do you want to take it?
I'm actually setting up a chart right now regarding this. So I'm going to actually let you take it first, if that's okay.
All right. I'm completely winging it here.
Yep.
All right. But I am going to say, and I'm going to pull up a longer term chart. I don't know. Problem is, let me do a shorter term chart, but I want to go back in time. So let's take a look. I'm going to go back into 2015.
Hey, Tom, we are not seeing your chart right now.
Okay, appreciate it. I'll pull it up in 1 second. All right, I'm just trying to change some dates around so you haven't missed anything. Okay, so here's the chart. It's the S&P 500, and I just changed the dates for the 2 years, 2015 through 2016. I'm going to pull it up, and I haven't even looked at it. So, but my guess is, yeah, here is the big sell-off, and here's the rally in 2015. You can see the volume decline. Here's the sell-off, a couple big spikes in volume, and here's the move back to the upside and volume decline. And then we come back down in 2016 again, big volume on the selling. And as you notice, the rally back up, volume declines. We did have one big week. This may have been option expiration week. Probably, yeah, it looks like it probably was option expiration day, which we always see heavy volume. But for the most part, when I look at the market, volume, you're going to have panicked selling on major moves to the downside. The market always sells off faster than it recovers. I mean, you might see when the volatility first, spikes and you get the big drop, you get a quick bounce back to the upside. So you can get a quick spike in terms of price action back to the upside. But once things settle down, the market begins its move back up, and it's much slower than what we saw on the way down. Here's another example. The market was coming out of this bottom. You know, we had these double, triple tops here, and then all of a sudden a big move down. Everybody panics. I don't remember back in June of 2016 what happened, but there was probably a news item. Everybody's still nervous, and they think, oh gosh, here we go again to the downside. So they panic and they jump out. So you always get those volume spikes with selling. I don't know too many people that panic buy back into a market. In fact, they usually don't trust it when the market moves back up. So I think historically, if you go back just about in any market, you're going to see that the selling is accompanied with heavier volume than the buying that comes in later. So I would just look at a chart like this and say, to look at this and to say, well, this move back up here in 2016 is on lighter volume than what we saw the selling, so it's not sustainable. I think that proved to be a very, very wrong conclusion to draw. And in fact, it wasn't until we moved higher and higher and kept putting in price highs, hitting resistance, and printing a negative divergence. That is, in my opinion, what caused some of the selling here. And I'm not sure what happened here, but obviously the breakdown, this looks like a little bit of a head and shoulder breakdown to me. Oh, never mind. We got a higher high over here. But that was a key support level nonetheless, probably at about the 2035 level that we lost. But then we came back up and we recovered it on less volume, by the way, before we kept moving higher. So my feeling is that you're always going to see less volume on buying to the upside because there is no rush to buy. There is no panic involved. To me, fear is a much more of a motivator to sell than greed is to buy. And to be honest, when the market's selling off, there's not a whole lot of greed out there. Everybody's scared. So I'm going to say that based on that statement, that I think that volume, that this does not suggest. I disagree with that statement. I do not believe that increase or decreasing volume suggests that this rally is going to fail. I think it's been proven before. I think it'll be proven again. In my opinion, what's much more important is where the money is rotating to. And I still see everything bullish. So I'm going to make the argument that I disagree with that statement.
All right. I'm stealing the screen here. Let me go where I was looking. All right. So I did that workshop on volume. And what you learned, hopefully, in that workshop was the fact that if you're in a trend, and this is from Dr. Elder's book, if you're in a trend and you start seeing a volume drying up, typically that is a signal that there might be a trend reversal. So I would say, you know, as far as the statement goes, yeah, I have to agree because that's what my technicals tell me. I'm pretty much a purist as far as my TA analysis goes. So the idea is you've got declining tops on your indicator, remember, and we have rising tops on the price. And so that does tell you that there's less going into the buying. We're not getting that. And I agree, you know, people don't panic buy, but you should see in a rising trend, you do want to see an increase in the volume. And when it starts to dry up, that's when you should expect the trend to fail. Now, that is true, but I wanted to look at just a few volume indicators just to get a feel for what we're seeing there. And it's showing me that while we are seeing this decline in volume, using the force index, looking at shaken money flow, looking at the OBV, I don't think we're in trouble here. And that's why I like to use more than just what is volume, what's going on there. And so let me show you a few examples here. So I'm looking at rising bottoms here and on the force index, and we're getting rising bottom. Actually, when you look here, this is what I wanted to show you. So we had these rising bottoms on the force index, and look what was happening here. We had a positive divergence, so we got the move off of that. We're now seeing a move toward that zero line. And really, I think with the force index, you want to look at these peaks, and I'm going to show you why. Now let's make it fat and let's make it somewhat clear. There we go. Here we go. So let's look at just, I'm going to look at the, you can look at shaken money flow. In this case, you can see we were peaking here on both the force index and we were peaking here on the shaken money flow. And what ended up happening, we started to see that decline. And in this case, notice what happened to volume during that decline. And again, I agree with you about the panic thing, but it also tells you that this trend was really in force here, and we should have expected more downside. We were increasing in our volume, and we'd peaked already on these particular indicators. Look at the peak here on these previous ones. Let's go back here to verticals. And look at these peaks, and we'll see what happened. Actually, I'm going to go to the second one. We would have gotten a little bit faked out here, but not really, because you ended up with a nice move off of that peak. And then we fell back down after we moved down into that trough. But then we peaked once more, and then we started to head back up. So these were peaks for us, and we're starting to head back down, but that's your unwinding of that particular indicator. And so now we start to watch for the move to the upside and look for peaks on the top. And then if you look at what's going on with the OBV very quickly, I'm going to thin out the line a little bit here. We were in a declining trend and we broke out from that. And we're now looking at rising bottoms on the OBV. And those are coinciding with rising bottoms on price. And that's a confirmation of this trend. So I don't think the trend is necessarily going to end. And technically, which is why I ended up saying agree, technically, when you start seeing the volume drying up, you should expect a rally to dry up. But at this point, when I look at these other indicators, which is why I use them to get more information, they're telling me that not to worry about that decline in the volume at this point, not yet. And so that would be, I am saying agree, but I disagree that the rally is necessarily on its last legs right now, because I think we're still looking at decent volume indicators at this point.
All right, I'm confused. You agree,
Yeah.
but you disagree?
Yeah, I have to agree, just because, you know, when volume dries up, then you should expect a rally not to last. If you were saying declining OBV, or if you were saying, you know, some of these others, I'm going with the agree, just because as a technical analysis purist, you should expect the rally not to last. But I'm just saying that based on the volume indicators, I think we have a little more time to eke out of this upside rally. So does that make sense?
Yeah. I mean, I look at the market, I look at it a little bit different, and I find the poll results pretty interesting, that it's really close to 50-50. 57% agree with you, 43% agree with me, and disagree with the statement. If we were in a bear market, then I think rallies on lighter volume, testing overhead resistance, I think that's a completely different ballgame. But this latest move to the upside, I believe, is still part of a bull market. And in bull markets, I mean, those who are looking for high volume moves in bull markets a lot of times are very disappointed, because most moves to the upside are very boring. They tend to last, you know, it takes a long time. The VIX drops off the charts. You know, everyone's sitting back saying, oh, we got bad news out. Here we go to the downside. And the market shrugs it off. And another boring light volume day, it goes up again. That's just the way bull markets work. So yes, we're still in a high volatility market, but I think that this move to the upside, I am not concerned about the light volume. That's the least of my worries at this point.
Right.
Again, my own personal thought, but
yeah. And, you know, a lot of times you'll see kind of flat volume, not a whole lot going there. But yeah, I think seeing that decline in volume is worth noting for the latest. But by looking at those indicators, it tells me I don't need to worry about it yet.
Right. All right. Well, we are just about the end of another day. What do we got coming up?
Oh my goodness, still a big week ahead. Wednesday, tomorrow, Tim Ord from the Ord Oracle will be our guest. You can read more from him in the Top Advisors Corner. We have Julius, our resident technical analyst. He's now somewhat resident with us. The RRG creator, he will be with us Thursday. And finally, you will be doing a workshop on Friday, and you are still taking suggestions on the survey.
Yeah, I've got some ideas in my head, but haven't picked one, and maybe someone will trigger something for me. So definitely complete that survey. If there's a topic, something you'd like to be explained a little further, certainly pass along. Would love to hear.
All right.
All right, and I guess with that, we can go ahead and wrap up. For those of you who haven't been paying attention, I will just tell you that the Dow is now up 197, NASDAQ up 118. Not seeing much of a pause in the NASDAQ. The other indices pulling back a little bit, but NASDAQ staying near its high. So it looks like a pretty strong day so far for the market. I want to thank everybody for stopping by. Please remember to complete that survey I was just talking about before you exit. And I'd love to get your feedback and hear what you think of Market Watchers Live, in addition to maybe some topics for Friday. Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody. We'll see you back here tomorrow. Happy trading.